So next question we're going to see about the question number 27, the following. The balance sheet of a X Limited. So they're given the balance sheet. Here in adjustment, the company went to the voluntary liquidation. Voluntary liquidation of the asset were sold. What is the meaning of a sold? It is the sales of the Y company of rupees 1,50,000 payable. So 60,000 of the cash. So in a cash item we have to take the 60,000, which sufficient to the discharge of the creditors and the bank overdraft to the payment of the meaning of payment of is paid up, means giving by the money. We will purchase through the money, but pay off means the company itself, the purchase company itself take over. So we'll never think it out. Maybe it's a liability. Both the creditors and bank overdraft, they will take over it. Winding up, and the expense of 2,000, as 90,000 will be allotted of 12,000 of a share at the each of a 10. For the X company, 12,000 into 10, 1,20,000 as a equity share. But for Y Limited, it was a 7.50. It means for X, 12,000 into 10, 1,20,000. For Y, 12,000 shares into 750. Here we have to draw the ledger of the books of the closing books of the X Limited and journal entry recorded as a transaction and Y Limited also. And here in the question they are given in expenditure can be treated as a reimbursement. So we have to mention the expenditure. Next, creditors and the bank overdraft can be shown as a takeover, as then the paid off. It's a kind of, from the liability side, they're going to be take off the two items, that's a creditor and the bank overdraft. So buying the purchase company. So here the selling company is X and purchasing company was Y. Till this you are clear in the explanation of a question. Now we are moving to the answer. Step of the answer, equity share capital, to find out the purchase consideration. So 12,000 of our shares into rupees 7.50, 90,000. Next, cash 60,000. If we add it, we will get it as a Y company purchase consideration is a 1,50,000. The first step was over. Next, we are moving to the ledger of the X Limited. So realization account means debit side is the asset, credit side will be the liability. So land and building 90,000, machinery 50,000, stock 17,000, sundry debtor 20,000. So till this everything will be in the asset side, but I mentioned it, the bank liability takeover. The 50,800 I mentioned in a statement here, no, there going to be a payoff of the creditors and bank overdraft. So creditor plus bank overdraft, we have to add the both the value, 30,000 plus 28,000, we will get it as a 58,000. Next, expenses 2,000. So we will tally the debit side. Now credit side, the liability value, creditor, bank overdraft we have to mention. So Y of our purchase consideration is a 1,50,000. This is a purchase consideration. So now we are going to tally up. So in realization account, debit side is coming means it will be the profit. But in this question we are getting in a credit side. So it is a equity shareholder is in a loss 29,000. So if you tally the both the side, 2,08,000, 2,08,000. Now we are moving to the next step of a equity shareholder account. So from the realization loss, we got a realization account. The rupees is a 29,000. In textbook, in a question, they have given a profit and loss on the asset side 1000, and equity share capital already in a textbook they are given as a 1 lakh. That means 12,000 into 10, 1,20,000. Now, so this is the highest value. So we are going to find out the difference. The different amount is a 90,000. That is a equity share of the Y Limited. That's we going to be transfer. Next, we going to equity share of the Y Limited. From we have founded of the equity shareholder account. Now we going to transferring to the Y Limited. So by equity shareholder 90,000 to how we found it out to Y company 90,000. So we will tally up. Next, we are moving to the realization account. How we will, what are the items we are going to transfer? One is a equity share. Next one is a cash. So equity share capital of a Y was a 90,000. We are founded in a shareholder account 90,000, and the cash is given in a textbook itself 60,000. If we add the both the thing 1,50,000, that is a realization account value. Clear? Now automatically we are moving to the next step of the journal. So purchase consideration. So the purchase consideration, the value is a 1,50,000, 1,50,000. Next, asset and liability. So asset value in a working note we have done land and building, machinery, and a stock, debentures, and the takeover liability. That is kind of the what I've told you, bank overdraft and the sundry creditor. So 90,000, 50,000, 17,000, 20,000, 58,000. Now business purchase is a purchase consideration value and a creditor value, bank overdraft and capital reserve. That is the balancing figure of this and this. Okay, you can say it as a balancing figure of the differentiate. This is the balancing figure. If we total this value, you will get it as a 2,35,000. If you total is this will be a 2,08,000. From 2,35,000, 2,08,000, if you minus, you will get it as a 27,000. That is our capital reserve. Next, last one, the payment. The equity as liquidator of the X Limited account debtor to equity will be 1,500. How we got 1,500? Sorry, 1,50,000. That is a means of the equity share 90,000. In the 90,000 we will get it as a 12,000 into 7.5. The cash is 60,000. Okay. If you add 90,000 and 60,000, you will get it as a 1,50,000. Clear, my dears?